Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Thursday, second day of February 2017, and this is the Daily Report for Gold and Silver. Nice upside moves in the precious metals markets today, with gold trading up about 0.8%. Now, that gain is not on the back of a weaker dollar. This is pure safe haven buying entering the market, and it has really moved the market well off of 1200, closing at 1217.80. That's putting it up about $9.50 on the day, and this continuous contract now reflects the April futures position in which we took a long stab at the market at about 1203. Low today is 1210 and the high 1227. It is that high and the fact that we didn't close at 1220, that's something that I do want to take a look at. But I am very, very satisfied with the gains that we have seen today in gold. Over to silver. Now, silver did in fact move higher on the day, but not anywhere near the type of change, net change that we saw, of course, in gold. Only up about under 0.2% in terms of silver pricing, up about 2.5 cents to close at 17.47. So traders, the fact of the matter is that we definitely had a pretty nice upside move today as we witnessed gold trading about $10 higher in terms of where the market itself closed at. Now, what I find interesting is the fact that when we look at the high that was achieved intraday, we're looking at a daily bar chart, and that's why I've got it in bar rather than candlestick format. We can see this nice upside spike that truly blasted through this level of resistance that sits at, on a technical basis, of course, it sits at around 1220. 1220 is absolutely an area that technically has given us some historical data of being a top as recently as this month, and that's, of course, this top right up here. Now, the fact of the matter is that it did trade to that area, but it closed just below it, and you can see that right here with this little hash mark. And so it's obvious that we still do have a little bit of resistance at this particular price point. I don't see great difficulty breaking through there, but as of yet, we've been unable to, and now we're going on really the third attempt. You can see this a couple of days ago. It closed near the highs. Here, yesterday, we had a small down day, but you can see it came close to again. And then today, of course, it did break through. Now, Steve Nissan would call this a scouting party. And in essence, what a scouting party is when the bulls will move the market up to test the fortitude of the bears. And when we get an effective close above this price point, meaning 1220, then he labels it a beachhead. In other words, that's the point when resistance becomes support. Now, with that in mind, if you recall from yesterday's show, we talked about the fact that we're now plotting our exit strategy based upon a fib extension. And for the fib extension itself, I've created it by going from the lows down here at 1120 up to these highs. Let me go ahead and change the color. So I've gone from the lows to these highs, and then I have plotted the extension beginning at this low at 1180, and here is a 61% move. This, of course, is comparing it to the first wave, wave 1. A 1-to-1 move would take us to 1281. 61% of that move is 1242, and 1.618 is 1343. Now, I do believe that we will see this market over time move well past 1280, 1281. I think that this is the area that we would look to see a conclusion of this current rally. But also, traders, there is a high likelihood, as far as I'm concerned, that this rally that we're currently in is going to be composed of a subcount behind it. And I'm not sure where that subcount may come in, but it's probably not going to be a straight rally up as we witnessed on this $100 rally, which occurred at the end of last year, beginning of this year. So as such, one of the things that I think is a distinct possibility, and bear with me on this one because it's one of many models that we look at, but let's assume that we've had our rally and there's our benchmark. We've finished our correction, and now we're going to have multiple waves. I think we could see the market go as high as 1242. In other words, break above this level of resistance. This will now become support. Break up to this point, 1242, and then we would get some sort of a corrective wave, and then the final move up to 1281. So I am going to revise my target right now, and our exit strategy is going to be closer to 1242 than 1250, 1259, and it's based upon these new studies and also based upon the fact that we now have this small correction in place so we can begin to plot exact numbers for our extension. In other markets that we follow, Dow Jones Industrial Average in essence fractionally lower, but I'm going to give it a label of unchanged. There is absolutely an uncertainty factor, and after seeing the dramatic rises witnessed following the presidential election back in November of last year, we are really seeing some real resistance in the market and uncertainty as new policies, pen is put to paper, so to speak, and the world really waits to see what kind of impact or repercussion many of these new policies will have, as well as President Trump's leadership style, which, to say it the easiest way, is unique. Anyways, Dow Jones Industrial Average closing at 19,884. As I said, fractionally unchanged. Standard & Poor's did close marginally or fractionally higher. Let's call it unchanged on that one. But the NASDAQ did give up a little. But then realize the NASDAQ index has been burning twice as bright recently as the S&P 500 as well as the Dow Jones. That closed down about 16 points or 0.3% lower on the day. Now, as I said about the gold market, which went up, it went up even with the dollar being fractionally higher on the day. The key to me, though, is it is still below 100, and I still believe that there is a large percentage probability that the dollar will continue to trade under pressure. Lastly, we'll look at crude oil. Crude oil, marginal change down about 17 cents, a 0.3% drop, now trading at 53.71. We've absolutely seen a pause and a consolidation period at least begin to emerge in U.S. equities, whether it's short-lived or whether it's an extended consolidation. We do see the market not moving as rapidly to the upside as it has. The dollar is also something we've been focusing on quite intently, especially as it pertains to precious metal and gold pricing. And we talked about the fact that we have been really bearish on the dollar really ever since it hit this top up here at about 103 and began to trade lower. And we've also identified a key level of support that could enter the market, which comes in roughly at 99 on the dollar index. Dollar index is not that far away, about 0.8% away at 99.82. And even though we had a slight update, as you can see here, we have good technical evidence that this is an area we certainly would want to look for. So if we see the market continue to break lower, we want to see if it finds any kind of footing or solid ground at this particular price point. Because traders, if it does, we could get a slight bounce up. I believe that over time it will come down, but we could get that bounce up. If it does break through this like a hot knife through butter, so to speak, the next real level of support really doesn't come in till about the mid 97s on the dollar index. So we could see another couple of percent of value drop out of the dollar. And then lastly, for trending markets, I do want to look at a daily chart of the NASDAQ. This is the NASDAQ 100 E-mini. And what's interesting to me is where we saw a real headwind and congestion area form on the Dow at 20,000, Standard & Poor's near the highs of where it's at. We saw the NASDAQ really burning like a candle at both ends as it continued to rage to new highs in this area here. And this during a period in time when there was definitive consolidation within the market. Now, today we had the NASDAQ close down, but it actually closed off a much greater percentage than we saw in the Dow Jones or in the Standard & Poor's. But I do think what we're witnessing here, simply put, is around a profit taking, because this market has moved up in such an accelerated manner that profit taking is going to ensue. And I think that that's what we're looking at We are consolidating, though, in the NASDAQ, and this is the first time that we've seen that in the last couple of weeks. The lows that we saw as this market traded and broke to about 1180 are very, very supportive in terms of the price point. We have seen gold prices trade above that. I do believe that we have strong support at this point at about 1200, and our resistances we talked about, I believe we have minor resistance at around 1220 with major resistance at about 1250 to 1259. We will look to raise our stops up. They're sitting at around 1180 currently. When we do move them, we'll move them just right under 1200 per ounce. And we want to see how the market reacts if it continues to trade higher. As I said, I do not perceive a major problem in breaking through that 1220 area, and our target still remains 1259 for our exit. So maintain your current long position in gold, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.